Hello and welcome to From No Crypto to No Crypto. This is Blockchain Wayne bringing you another cryptocurrency podcast. Today's episode brought to us by Concierge Club, mobile private key wallet, and point of sale solution. Concierge Club makes purchasing easy, safe, and overall process more efficient while costing less. All right, let's take a look at what's going on with the market update. Didn't do any podcasts over the weekend. Wanted to see how things would play out. Whole lot of sideways movement. Currently, Bitcoin is sitting at $3,872, down about 7% from the peak last week, but still consider it anything above 3,800 is considered sideways movement for me. 3,800 to 4,200 is pretty much sideways for me until we can either drop below that or bust above, say, call it 4,500. I think it's still considered sideways movement. Global market cap for cryptocurrency is sitting at 126 billion right now. Bitcoin dominance still sitting at over 53%, sitting at 53.65. Whole lot of red when you look at the market right now, mainly because of what's happened really in the last 24 hours. We saw, it test 4,200 over the weekend. A lot of times weekend moves are not very strong. Price can be moved easily up or down just because there's not a whole lot of trading volume over the weekend. But that's where we're sitting right now, just still keeping an eye on it. Some people that post charts on TradingView are currently saying, despite what we see right now in the price action, there looks like to be some bullish momentum setting up. But again, it's all speculative. You want to hedge your bets if you are in a position, have a stop loss set. Other than that, if you're just holding long term, I wouldn't really do anything one way or another right now until we see what the market does. All right, let's take a look at what's going on in market news. So, really, this article came out the other day, and I shared it on the Facebook page, but only a few weeks left in 2018. Bitcoin trading volume for the year has already crossed 2 trillion. Many countries have seen record BTC trading volume at different points of the year, with more every day. It seems like people are adopting the popular cryptocurrency. They're seeing this bear market right now as a buying opportunity, and that's what we're seeing happen with volumes overall. It's a 61% increase from last year's total volume of 870 billion. Now, the growth recorded in 2017 over 2016 was 96%. So we're seeing year over year massive growth in trading volumes, and we're going to start to see that really start to reflect in price here soon whenever this bull market decides to kick off. Just waiting to see what happens. All right, so the SEC has published a memorandum last week as well after the latest meeting regarding a BTC ETF. The application was originally brought to the commission by VanEck and blockchain software and financial service company SolidX. So representatives from VanEck and SolidX, as well as the Chicago Board Options Exchange, which you hear referred to many times as CBOE. So they met with members of the SEC last week and basically gave some information. They argue that Bitcoin was in fact more resistant to market manipulation than its traditional counterparts with approved ETFs. And they gave comparisons of whether it was a product company or something, whereas inside information gets out about product releases or anything new they come into the market that could, make the price more volatile, more manipulative. Now, VanEck, as you also heard me in a past episode last week, announced a partnership with the world's second largest stock exchange, NASDAQ, to jointly launch a set of transparent, regulated, and surveilled digital asset products, starting with the Bitcoin futures contract, which is slated for Q1 of next year. So VanEck and SolidX are meeting with the SEC. They were arguing basically over the fact that Bitcoin is suitable enough for an ETF approval from the SEC. As you heard, the SEC, one of the SEC chairmen stated last week that he doesn't believe that Bitcoin is ready for an ETF. So interesting news to see. Many people are optimistic that an ETF will be approved in early January to February of next year. All right, so next up, Fidelity Investments looking to expand its institutional crypto assets platform to include trading for the top 5 to 7 cryptocurrencies by market cap. And that was revealed at a Block FS conference in New York last week. It came in response to a question from CoinDesk posed by Tom Jessup. Posed to Tom Jessup, should I say, head of the Fidelity Digital Assets, on what other cryptocurrencies may be added to the platform to be launched next year. He went on to explain that it's taking a customer-driven approach for now, and that is 13,000 plus institutional clients are interested in Bitcoin and Ether because they make up a large part of the current market cap. And he said, I think when it comes to security tokens, are tokens that are likely to be deemed securities, they're waiting for that space to develop. As you've seen what's happening currently with the SEC, which we'll talk about some more developments in the SEC later on in this podcast. He went on to say, I think when it comes to security tokens or tokens that are likely to be deemed securities, we're waiting on that space to develop. So we're really waiting to see what's going to happen. Fidelity is, you may think Fidelity just jumped in this space, but they spent 4 to 5 years research and development in the space and has a long view of the crypto asset class and the underlying technology's potential, which Jessup compared to the exponential sweep of the internet. He acknowledged that digital assets have not had a great run this year. I think we all agree that, pointing out that a year prior, the run-up in prices saw Fidelity's charitable crypto donations vehicle garner some $70 million in contributions. So Fidelity is not new to this space. When you look at the size of Fidelity and what they've done, just creating the Fidelity digital asset company to create this trading desk, you really see it. There's a lot of bullish sentiment long term in Bitcoin and crypto from Fidelity. All right, so Forbes released an article that I shared over the weekend that despite this year's bloodbath in the crypto asset space, the industry is, likely to generate considerable investor surplus in the long run. It said, comparing it to others, it has the best chance to deliver the most attractive risk-adjusted returns over the next 10 years compared to less controversial favorites such as Amazon stock, a 10-year U.S. Treasury bond, an apartment in Manhattan, or other consensus long investments. So when you look at Bitcoin, they gave us several reasons, and Bitcoin is a rare, unlevered asset in a levered world. So global debt has reached 250 trillion, 70 trillion higher than in 2018. The U.S. runs a $1 trillion deficit. Pension funds are underfunded amidst retiring populations, and student debt has snowballed to 1.5 trillion in the U.S., with 9 out of 10 borrowers struggling to make payments. So with all that happened, looking at the long, not what's happening today or tomorrow, but looking at what's going on that's going to affect the long-term viability of many investments, all of this puts pressure on central banks to print excessively into the foreseeable future, diluting the value of fiat currency. What's fiat currency? Those green dollar bills you may have rolled up in your pocket or in your wallet. That's what's happening. Smart money, and increasingly just more money, will flock to unlevered assets that have limited supply, gold, Bitcoin, and other alternative assets that aren't a part of the mainstream investment world. Looking at some other reasons why Bitcoin is the best long-term play according to Forbes, blockchain is built on the premise of social scalability. Another reason given is blockchain technology enables financial inclusion without rent-seeking intermediaries. Now, let's talk about what that means. What is a rent-seeking intermediary, right? If you want to purchase something from the store and you want to use money that is not physically on you, you need a third-party intermediary. Now, that's whether or not you're paying with a card or cash, because you have to get that cash from a bank, or you pay with cash, and that company has to deposit that cash into a bank, right? Or you want to swipe your card, Visa or MasterCard has to approve that swipe, and then your bank has to approve that, hey, yes, you have the money in there. And what do these companies do? They make millions and billions of dollars just by being an intermediary. Rent-seeking, meaning they're just looking to get a piece of the game. They want to get paid on every transaction in the world, and we would like to eliminate a lot of those third-party intermediaries because of what's happening with them breaking trust in a lot of cases. So if you take Bitcoin, for instance, it's faster, cheaper to send, inherently deflationary, easier to store, divide, and is a true non-correlated hedge. Unlike gold or the US dollar, it works on weekends, 24/7, 365. You can trade it 24/7, 365. You can trade it on weekends. So it is judgment and censorship resistant, subject to no capital controls, bank restrictions, or asset freezes. So it is trustless in that a TTP is not necessary to handle your assets, in the sense that you do not have to trust the government to preserve value on your behalf. So this is why Bitcoin is a good long-term play. The fourth reason, to sum up what Forbes said, crypto assets largely addressable market results in an investment with asymmetric upside. Now, why would they be saying asymmetric upside? I mean, we've been in a bear market all year. The size of what the crypto market is right now. I mean, let's face it, whether it's 126 billion that we're looking at right now, or 250, 300, even 500 billion, which we looked at, earlier in the year before this huge decline. That's just a drop in the bucket. We're talking about, $100 trillion currency and $100 trillion market cap of all currency in circulation worldwide right now. And that's not counting all derivatives and everything else that could take that number up to 200, 250 trillion or more. But that's what we're looking at right now. So $100 billion is just a drop in the bucket, not even a drop in the bucket. When you see the upside, that's why you see many venture capitalist investors that are bullish on cryptocurrency, and they're pumping money, even Fidelity as well, because they see the long term. Where is this going to be when cryptocurrency market is a 1 trillion, 10 trillion, $50 trillion market cap? What do you think of the value is going to be, or some of these cryptocurrencies that are out there now? And there may be some new ones. Technology is constantly evolving, but you're going to see blockchain and crypto really start to take off. All right, so that's my take on the Forbes article. I want to jump next into some news from the SEC. So the SEC has settled charges with professional boxer Floyd Mayweather Jr., and music producer Khaled, better known as DJ Khaled, for not disclosing they were paid to promote initial coin offerings. DJ Khaled! Yeah. All I do is win, no matter what. Okay, got to stop that right there. DJ Khaled says all he does is win no matter what, but obviously not in this case. Both Mayweather and Khaled they neither admitted to or denied charges in their settlement. Of course, Mayweather's going to have to pay $300,000 in disgorgement and $300,000 in penalties for accepting $300,000. So if you notice that, Mayweather has to pay twice of what he earned from promoting a couple of different ICOs, and Khaled got to pay $150,000 in penalties for, I believe he accepted around $50,000. So in this case, neither one of them win. Now, those ICOs were deemed to be scams. The founders behind those ICOs are charged with fraud. So, the SEC, they're cracking down on crypto ICOs this year. And a top official said earlier this year that dozens of cases are pending. And it looks like the next wave of enforcement by the SEC is going to be focusing on social media influencers who have promoted ICOs to the general public. Now, that's going to be very interesting to see how it plays out, because my take, you're looking at the Mayweather and DJ Khaled thing is, yeah, they promoted something that was deemed a security. It was deemed a fraud as well. So they got fined, right? And what's gonna be curious to see is, are they only going after the ones that were deemed frauds? What about the ICOs that have launched, that have legitimate projects over the last year? Now, they can only go back a little over a year, because that was when they issued the guidance that any celebrity promoting anything that could be deemed a security, whether it's a physical security or a digital security, must disclose what they're being paid to promote it. So they're not saying they can't promote it, but one, they must disclose it, and two, it has to be deemed a security. So we're going to see what happens as this unfolds, and as social media influencers get targeted. So looking for some news updates on that. All right, last up in the news, Bitcoin community subreddit Bitcoin has hit the $1 million subscriber, not $1 million, $1 million subscriber mark, according to a post yesterday from one of the moderators. It's one of the most well-known Bitcoin communities. It was founded in September 2010, almost 2 years after the release of the Bitcoin white paper. It reached 1 million subscribers amid the recent market slump. There is some controversy around this group. So this is subreddit /r/Bitcoin. Now there's another one, subreddit /r/BTC, that was created several years ago after some controversy within the Bitcoin group, the one with the full Bitcoin name in it, because many people were saying that many posts were censored, and they were looking, anytime someone tries to bring up legitimate debate over whether it was a fork, whether it was hash rate, whether it was block size, they were censored from that group. So many people moved over to the BTC group. However, the BTC group only has 230,000 members compared to 1 million of the Bitcoin one. But as the market educates itself and evolves, this is something I'm going to watch to see. Definitely, I'm following both communities just to see what's going on in both and what kind of conversation is being had in there. just to keep up with what's going on. All right, so let's jump into some crypto education today. And I want to point out, so over the last couple of weeks, I've taken several calls and messages and emails from people that want to know, hey, what to do in a time like this where things have really hopefully bottomed. I mean, we're hoping we've seen a bottom, but we've seen, whether we're at the bottom or we're not, we're almost there. I mean, whether it's 3,700, 3,500, 3,000, once we hit that bottom, we're going to see things start to turn around. You're going to see capitulation. You're going to see a lot of fear, which we've already seen. A lot of people getting angry, cursing on social media groups about their investments going to nothing or going down or losing all their money because they went in heavy on something they didn't really understand. But what do you do now? So say the price is bottom or potentially bottom. So say you bought high. Say you bought in around $15,000, $16,000, $17,000. You bought Bitcoin. I'm just going to use Bitcoin because, let's face it, it's the dominant one. It's what most people talk about right now. And we're not going to dig too much into any of the other ones right now just because this is just a scenario based. And you can take this for anyone out there. First of all, if it's anything other than Bitcoin, you want to make sure you've done your research and understand what it is. If you're going to hold it, invest it, or potentially buying it, or you're already holding it, do you really know what the roadmap is for that technology, for that cryptocurrency? Do you know what working products they have? Do you know what their future roadmap is? Because you can have a crypto that was pumped in 2017 just based off of hype, but where is it going today, right? Where is the movement going? What is happening? What kind of development is being done? Who's working on it, right? So that's the first thing. But say you bought high. Say you bought Bitcoin 15, 16, 17,000. Maybe you bought a whole Bitcoin, right? Maybe you threw in $15,000 and you bought a whole Bitcoin, right? What would my advice be right now? And this is not financial advice. This is just what I would personally, let's just say it's just what I would personally do if I'm looking at that, right? Current price, 3,800, I would buy another one. Why? Because I just cut my cost basis huge, because now when the market does start to recover, instead of me having to wait for Bitcoin to get back over 15,000 to be in the positive on this investment, I've only got to wait for it to get to, say what's called in the middle in there between 4 and 15. Say it's only got to get to about 8 or 9,000 before I'm in the positive, right? The more you can lower your cost basis, the better you are when this thing does start to take off. So that's what I would do personally if I was sitting on something like that. Maybe you bought all along the way, right? And you already know about the power of dollar cost averaging. You bought when it was 1,000, you bought when it was 20,000, and you bought everywhere in between. You also are going to be in profit a lot sooner than people that just bought high and sat on it. So, and you're constantly, every time it dips, if you're continuing to buy, you're lowering your dollar cost average into that investment, right? So many people are on the sidelines. I got a few messages from friends that have watched me over the last couple of years and just been scared to jump in. Scared, didn't really understand it, don't get it, but now they're curious. They still see a lot, and they definitely notice that there's some value in it right now at this price, but they're scared to jump in. And as with any investment, now whether this is crypto or you're playing stock market or you're dabbling in Forex or anything else, you don't want to invest more than you're willing to lose. Every investment has a potential to lose your money. You can invest in Amazon stock. What if something comes out tomorrow that's scandalous about Amazon? You realize that their stock was propped up and it crashed. I'm not saying that's going to happen, but what if that happens? So you want to make sure you hedge your bets, right? So I would recommend, if you don't want to come in big, like I tell people, start buying a little bit at a time, right? Use some of these apps that I've talked about in the past. I talked about using the bundle app, BUNDIL. Every time I swipe every time I have a transaction on my bank account, it adds a dollar, rounds up a dollar that it puts into crypto. And that happens, no matter what I'm doing, just living my life. I don't have to go in and click buy. Whether the price is high or low, it doesn't matter. It's buying all the time, right? Or just take a little bit at a time, set aside. I've got a friend that 2 years ago, he started, and he was in a situation where, he wasn't in a position where he could put a lot of money in, but he could do $30 to $50 every Friday. And that's what happened every Friday consistently for, going on almost 2 years now. That's what's happened day in, day out, or week in, week out, should I say. And he's amassed quite a bit based on that. So you don't have to go in big, but you want to start. And as you do that, you want to really start to study more and understand what's going on. Look at what's happening in the news, not just what the big news outlets are telling you, right? Because they're the ones that were telling you to buy it when it was at its peak, and they're the ones that's telling you to sell it now at the bottom. And that's really, the undertone of that is there's a lot of institutional money that's gathering this. I just talked about early in this episode about trading volumes for Bitcoin being so high over this year, over $2 trillion already. But that's not even taking account what can't be tracked. What cannot be tracked from OTC markets. Now, OTC are over the counter. Now, those where large investors or sellers can go and sell it outside of a normal exchange, so it doesn't affect the price. Or you do a huge sell order on a normal exchange, and it could tank the price. You do a huge buy order, and it could cause the price to jump up, tremendously right now. But a lot of OTC people are buying $50, $100, $200, $300,000 or more worth of Bitcoin, and they're doing it outside of exchanges. So, you want to go against what the masses are. Many people that don't understand typical investing is they're buying at the top and they're panic selling at the bottom. And this market is no different in terms of patience than any other type of market. Whereas, these markets have a way of transferring wealth from the impatient to the patient, right? So can you sit it out? That's what I mean. When people are panicking and thinking this thing is going down to zero, that's when your institutional money is buying up. Your experienced investors are buying up. So that's what you want to do right now. Whether you're scared to jump in, I just tell you, start dipping your toe in the water. If you haven't already created a Coinbase account, do that as well. Or download the Abra app. The Abra app allows you to be able to buy crypto at any time. You can link to a bank account, right? Find a crypto ATM that doesn't have high fees, and convert some of that cash directly into crypto. Just do a little bit at a time. Start building that nest egg, because a few $1,000s over a course of a year in this down time can really be huge whenever this bull market returns. And when we talk about what's happened with the debt in this country and in the world, you're going to see, what's going to happen when you see that meteoric rise happen again. So you want to be involved in that. You want to have some skin in the game. There's a lot of apps out there to help you get started. I posted some episodes in the past about those, the Bundle app, Abra app, Coinbase app, all these different ones. Now also, pay attention, look back at one of the ones I posted about wallets, and I'll probably touch on that again in the near future. But do I feel comfortable leaving a few $100 or a few $1,000s worth of crypto in an exchange or in a mobile wallet? Absolutely. But once you start to accumulate and amass more, you want to start looking at wallet security, making sure that you've got your money, whether it's in a secure mobile wallet or desktop wallet or hard wallet where you have the private keys. You want to make sure you have that. So with that, that's kind of it for the crypto education today. I want to thank you for listening in, and we will catch you on the next episode.